Hello and welcome to this week's Money Roundup. We're over halfway through the year now, and as we reach the height of summer, companies commenced releasing their latest set of financial accounts. Investors eagerly anticipated these quarterly results for insights into levels of corporate well-being.
What we know at this point is that 172 out of the 500 US companies in the S&P 500 index have reported results so far. Technology, financials, healthcare and industrials are all doing particularly well. We also know that expectations for a good outcome have grown. For this current quarter, to estimate for earnings growth is a whopping 20%.
Profit levels this time follow on from impressive first quarter results, where earnings growth soared by 25%, surpassing the 17.1% expectation set by analysts.
Earnings growth this year has been supported by loose monetary conditions and new fiscal policies such as tax cuts, which have energised the US economy.
If we go a little deeper, there are some standout performers. As in the previous quarter, Goldman Sachs released impressive results. Profits surged 40% to $2.57 billion in quarter two, exceeding analyst estimates.
Other noticeable strong performers included Alphabet, commonly known as Google, which logged a 26% gain in second quarter revenues.
Harley-Davidson, a firm caught up in the trade turmoil, topped Wall Street's quarterly earnings estimates, and their shares rallied 9% after the company results. This has given hope that future profits will hold up better than expected, despite the tariff obstacles.
On top of all of this, Donald Trump gave a press conference on Friday to make as big of a deal as possible that the US economy grew at its fastest pace in nearly 4 years in the second quarter, expanding at an annualized rate of 4.1%. In China, whilst above target GDP, the Chinese government have felt the need to act by pulling various fiscal and monetary levers to support future economic growth.
As well as requesting a change in the behaviour of local government to a pro-growth style, financial institutions are starting to be asked once again to make liquidity more accessible, including through shadow banking channels, which until now have been clamped down on.
Debt-driven growth has been in the veins of Chinese business and government since 2008, and it seems the pressures from the US may have the effect of putting President Xi Jinping's plans on ice.
In Europe, economic data across the European economy has remained resilient. European PMI figures remain well above 50, indicating the Eurozone economy is still expanding. Furthermore, the manufacturing PMI figures increased to 55.1, with manufacturers shrugging off mounting threats of trade wars between the Eurozone and the US.
The president of the European Central Bank, Mario Draghi, gave a more upbeat assessment of the Eurozone recovery, noting that the Euro area economy is proceeding along a solid and broad-based growth path, despite the uncertainties which surround the global trade environment.
Overall, it's been a positive week when reflecting on the three major economies of the US, China and Europe. Upcoming events include the Bank of England inflation report and US employment report. So subscribe to the True Potential Investor YouTube channel and join us again next week for the latest Money Roundup.